Hey, everybody. Thanks for tuning into the Wealth Puzzle. This is Mike Mansfield from the Lynn Group. And as always, we have the phenomenal Tana Pennington here to keep an even keel to the show. But welcome, Tana. Welcome to the
Thank you.
fun.
Thank you.
This is actually a funny week. We're actually now every week we always remind everybody that we normally record on Mondays. We give that disclosure as a don't think I'm a knucklehead by the time you listen to this if something has happened in the news and you're like, geez, Mike must be really out of the loop because he's not talking about this. What's going on? So I always panically tell people when we're doing this. So actually we're doing this on a Friday because next week's spring break. And since I'm in middle school, I'm going to take spring break and just go to Florida and live on the beach. I'm not telling the truth about that, but there was actually multiple lies in that statement. But in any case, because next week is spring break, I'm hoping to be a little flaky in and out of the office as I do have 4 small children to try to help my wife entertain. So here we are. But hey, you know what? It's an interesting Friday. I'm excited to record it because you know what? I'm a bearer of bad news, Tana. I'm a bad news bearer. We are going to have to talk probably about good economic data. And oftentimes, society has changed a lot since 2008, right? In the last 12 years, it used to be that when it came to economics, remember, I went to college, I took economic classes, and the way that it was presented to me was obviously a lie in college, because what they told me in college is when you get good economic data, that's good. And when you get bad economic data, that's bad. Turns out that's totally wrong. Good economic data is in fact bad. Bad economic data is in fact good. And so we've seen this since 2008 because after 2008, the Federal Reserve and the government got involved with playing big brother with society's money. They started doing all these fancy things called quantitative easing and Operation Twist and what's the TARF money. Sorry, that was.
You sound like you're barking.
Maybe I was. Same thing. But they had all of these programs. And I remember as a phenomenon, it was so interesting that every time, in the middle of quantitative easing 3 or whatever program they were in, that we would get good economic information that would come out and the stock market would go down. Oh, no. We don't want good news because that means that all of the Federal Reserve Big Brother easy money policies could come to an end. We like our cheap money. We like our free money. We like it all. Woohoo. We've basically addicted, investors, companies, society, whoever, to these very favorable money conditions when it comes to lending.
Right.
And so it's kind of funny because honestly, I feel like lately we're getting back to a very similar phenomenon in many respects. And that is people don't love to see good economic data because what does that mean? Oh, crudsicles. We're not going to get any more free stimulus checks. Oh, the Federal Reserve is going to raise interest rates and I won't be able to get a 30-year mortgage at 0.7%. Yeah, I mean, like, stuff that all these things that have been so unheard of, could come to an end if things go well. And I don't know. It's such a fascinating conundrum to say, people, don't we want a good, strong economy? This is the United States. This is the powerhouse of the world. Come on. Let's get the party started. Let's get the jobs back in action. So anyways, that was my rant. Anyways, I guess for the additional thought, Tana and I are here at the Lynn Group. We do retirement income planning. So for all of our new listeners and or viewers, there's a couple ways that you can be getting this information. Obviously, you can be subscribed to our podcast, which is called The Wealth Puzzle. You can get it on the old Apple phony thingy. I don't know what that's called. Is it just literally called podcasts? I think Apple Podcasts is the app, maybe. I don't know. Or Spotify or Google something. There's a Google version of it too. So you can tell how tech savvy I am based on the last 10 seconds. Otherwise, good news is, phone's ringing. See, I think it was last week your phone rang.
Yeah, it did.
So I did that intentionally. I had someone set up that call so that way I could kind of self-deprecate and say, hey, look, it's okay, Tana.
It happens to you too.
We're all human. Otherwise, you can be watching our show on YouTube and or Rumble. Those are 2 different ways to view the show. You get to see us, you get to hear
Yeah.
us. It's very exciting.
Yeah, absolutely. And we
But
appreciate your feedback too. So
that is true. That is true. It is all criticism, but that's okay.
no, it's good.
Yeah. The so in any case, here we
Yeah.
are. So what do you got
So
for us today, Tana?
yeah, so I sent you a couple of articles.
Yes.
The first one I think we should kick off with, though, is regarding President Biden's $2 trillion infrastructure plan that's coming down the pipe. So I think it's really interesting.
It's something. So $2 trillion. So there's some funny things going on. So I'll kind of take a bigger picture on that, right? So you always try to lead me with something, which is nice, and then I take it somewhere else. And then after the show is done, Tana normally, so you
Right?
all know, gives me some kind of general opinion on steerage of the ship. And but I'm the captain. It's like the other day I was watching that. Have you seen that new Moby Dick movie with that dude that's the good-looking dude that like played Thor?
I didn't see it.
Come on, it's like
I
a
didn't. I'm
classic. It's
sorry.
based on Moby Dick. But anyways, he's like fighting with the captain, and the captain doesn't like him. He's the first mate, and so the captain just like keeps the sails up and drives right into a storm. And he's like, "Put him down, you're crazy." And he's like, "No, I'm right." So that's kind of what's happening here. Anyways, the good news is
It's a good
after
dynamic.
trying to create that weird analogy, I completely forgot what I was going to say. So there's that. So President Biden, absolutely. Last week they started talking about, or actually, I apologize. Time flies when you're having fun. That was this week. Brought up an infrastructure plan.
Mhm.
Inside of the infrastructure plan, I'll kind of talk about what the infrastructure plan is, but inside of it, they talked about how they're going to, pay for things and do stuff. And a lot of it is about raising taxes. In fact, I believe I was reading another article that said these taxes will be the highest tax increase since like 1983. So it's been a while since we've seen some hefty tax increases. But it's fascinating because there are two things that cannot exist, Hannah, at the same time. We cannot live on a rhetoric that the economy is falling apart. In fact, the economy is falling apart so badly that the government needs to jump in and inject money. What did we just pass a couple of weeks ago? A little stimulus bill, right? Remember the price tag on it?
Like gigantic.
Yeah, gigantor. So we just passed a $1.9 trillion stimulus bill to inject money directly into the economy, give money directly to people because the world is falling apart. Remember, it has to be falling apart because there's no other reason to do that. We have to say, oh my gosh, everybody needs money right now. Blah.
Right.
Coming off of just a month or two ago when we passed almost another $1 trillion, coming off of a COVID thing where in totality, we've spent, $5 to $7 trillion of kind of bailing things out. So step one, the government is saying that the economy is hurting badly. Therefore, we need to continue use taxpayers' money and inject it, into it and raise debt and all this stuff and print money and all this stuff. We need to do this. It's emergency stimulus, all right? It's like putting duct tape on your gun wound. We got to do something, man, to get you to the hospital. We're saving the day.
Yeah, but the numbers are showing just the opposite of that. That's what's so interesting.
See, this is what I don't want to hear, Tana.
I'm sorry.
See, we don't want good economic data because then the free money stops.
Right?
Come on. So in one breath, the government is saying things are bad. In fact, so bad, we need to spend trillions to fix the bad. And then in the second breath, they're going to say we're going to create the largest tax increases the world has ever seen. That's an exaggeration, but it sounded good when I said it. And so to me, you say, well, wait a second. You're saying we need to put money in the economy right now because it's fragile. But in the same breath, you're saying, oh, by the way, though, we think we should also pull a boatload of money out of the economy. Can those two things really exist together and make a whole lot of sense in the moment? The economy is either fragile or it's not right now. The economy either needs money in it or it doesn't right now. If there was a time disparity between it, that would make more sense. For example, if we did the stimulus now saying problem now, and then, let's say, I don't know, in a year or 6 months, some little bit of time where you could say, oh my gosh, look, everybody, the stimulus worked. Everything is better. Life is good. So now let's kind of look at some other stuff here. Big picture, right? So I find it fascinating that this stimulus bill is all about raising taxes. For the record, if anybody is bored enough to do the math, you will find that the tax increases they're proposing, even though they're big and robust, and honestly, Tana, we should probably just do a different show on the actual tax increases and how they work.
Okay.
Because there's probably a lot to talk about there.
Mm-hmm.
But if you really look at what those tax increases are, you know what's ironic about them is they don't hardly dent any of the spending we've been doing.
Mm-hmm.
And it won't hardly dent the true spending of the new infrastructure bill and the COVID stimulus bills and all of that kind of stuff. So I don't know, this is America. We don't need fiscal responsibility. We can just run our credit cards up and go get a new one. Do the balance.
Not a good idea.
I know. Maybe what could happen, the government, maybe they could move all of the debt onto like the credit cards where you get the points. And then they could use the points on their free points to get like the cash redemption to pay down the credit card debts. So that, and then they could do 0% balance transfers.
Good idea.
So I would advise the government to go to nerdwallet.com and find all the best credit cards out there. And let's get our $30 trillion debt on those.
Great idea.
Boom.
I like the reward points because I always.
This is why I'm running for president in 2024, if anybody's wondering. Because it's these ideas. Golden. Okay, so anyway, so you're spot on. Biden just proposed currently 2, but they're saying it's going to be $2 to $4 trillion infrastructure bill to replace roads and bridges and all kinds of things. Fun fact though, the Department of something, don't hold me to that, the Department of something in 2019 did a big giant study and said, actually our infrastructure is not as bad as we think it is. Anyways, that was a sidebar. I keep doing that today. I'm like fired up. I used to be scared to death of the camera here.
We should do this on Fridays. I think you're good on Friday.
Maybe that's what it is. I'm thinking like Easter prime rib.
Yeah. Little time off.
Eggs, Easter egg hunts. Life is good right now. But anyways, so what does the proposal have? So let's see here. We got $621 billion in transportation infrastructure such as bridges, roads, public transit, ports, airports, and electric vehicle development. Okay. That's weird. I thought it was a $2 trillion infrastructure bill. That's only $600 billion.
Well, no, there's like several other items in there.
No, Tana, infrastructure bill.
Oh, okay.
This is like the confusing isms, right?
Well, what about the $300 billion in building and retrofitting affordable housing and upgrading schools? And
you got $300 billion for drinking water. I think that's all in like, what was that movie? What was it called? We just watched it. It was actually really good. Dark Water. Is that what it's called? Dark Water. It's kind of got that. It was about Teflon.
I didn't
that
watch
stuff
it.
We cook on. Do we not cook on Teflon anymore? Like it's incredible nonstick pans, but I guess it
might not be healthy.
They kill you. Anyways, $400 billion for elderly people. Let's see, $580 billion for manufacturing, research and development, and job training. So there's all these different things, but at least it's a little more infrastructure-esque than the stimulus bill. Remember when we went through the stimulus bill like a month ago?
And hardly any of it had to do with COVID.
9% of it is actually for COVID.
Right.
You're like, what? So now, spending money. Remember, we talk about the long game and the short game, right? In the long game, fiscal responsibility, at least to me, is important, right? National debts are important, obligations, things that we have. I mean, think about your own credit cards getting ran up. So that's all a problem, leads to inflation. It leads to a lot of things. In the short game, though, if the government wants to spend money, all they're doing is basically stimulating the stock market. They're stimulating the economy. You keep flooding all this money out of there. You think about small cap companies, national companies. Somebody has to do all this road work. Somebody has to build these bridges. Somebody has to provide the steel, and the screws and all of the stuff. And so all of this money flooding into the economy should inherently conceptually be good for the stock market, for the industrials.
Right.
So it's a double-edged sword, right? If you want to be the shallow investor, hey man, hot diggity dog, let the government just keep flooding the money in there.
They're saying that the U.S. manufacturing sector is at its all-time high.
Yeah, isn't that wild?
Yeah.
Not wild. So, what's funny was when you go back pre-COVID, one of the criticisms of the Trump administration is they said that, oh, yeah, the economy's growing, but manufacturing's in a recession. And it was in the middle. It was from like 2017 to 2018. There was a small recession inside of manufacturing. Manufacturing is important because it makes up almost 1/3 of our national GDP. And then all of a sudden in 2019, by like February or something, it had exited the recession, was actually starting to boom on all cylinders. And then what happened? Anybody remember? The COVID.
Yeah.
So all of a sudden the whole economy fell apart, which was a shame because manufacturing was starting to rock and roll, and then it fell apart. So just like Tana said, I made little pop-ups. Watch this. Look at that. Do you see the pop-up on the screen, Tana?
Nice. I love it.
Boom. Look at that.
Good job.
U.S. manufacturer races to 37-year high in March. Highest since the 80s. But basically what we follow is we follow the ISM index, which is the Institute for Supply Management. They have this index. If it reads above a 50 indicator, then that means the manufacturing is expanding. It came in at almost a 65, which is like massive. Boom. So people are out manufacturing stuff. They're making things. Factories are working. That's why we're seeing like the cost of goods going up, right? I mean, I think I talked about a while back. I went and bought a 2x4 at Lowe's to build something in my backyard for my kids, and a stinking 2x4 was $7.
Yeah.
Almost fell over. I actually keep 2x4s in my wallet now to pay people because they're worth so much. That was a low. We just hit a low. I wonder with my clients that listen to this, versus come to my office and see me in the conference room and talking to them. I wonder how much of a disparity there is.
Right?
Like if they're starting to wonder if I have a split personality or something. I swear it's all me.
It's awesome.
I'm all in there somewhere. But anyways, like you're right, Tana, this manufacturing is phenomenal. But once again, it plays against some of the rhetoric. I mean, you have manufacturing just off the chains. It's doing fantastic all of a sudden right now. It's finally, this continuation from pre-COVID in 2020. And I apologize. Actually, I said my mathematical dates wrong. In 2019, manufacturing exited the recession, and it was like that till 2020 when COVID hit, and then it all fell apart. So I think I was off on my dating. So someone is probably taking notes and ready to send me a mean email.
No.
So it came back to me, right? If you got to be able to correct yourself in life. So I was wrong there.
It's all good.
Well, obviously that's strong. You then play into this, like you're saying, this infrastructure bill and things like that. That's only going to help maintain the manufacturing, right? Someone's got to be making all this stuff. That they're talking about putting out there. And, one of the pushes of the administration is to try to make sure that a lot of stuff is U.S. purchased and U.S. based, and which is a positive, right? Remember America First policy.
Absolutely.
We're not supposed to like that anymore. All right, so that's good enough. But to that point, once again, was so thrilled to see this. But there's more. What else you got for us?
The other really important thing that's shaken up is the jobs. Unemployment rate is so low. It's fantastic. Lots of companies are hiring again. Businesses are getting to be, in their full normal activity. I think the statistic is about 94% activity level since
huge.
Huge.
Yeah. Well, and that's what's funny. So in March, there was almost 1 million jobs added to payroll. And so what's happening is the vaccines are allowing states to normalize, to lessen restrictions. And so you're seeing these huge swaths of increase in like hospitality and leisure jobs coming back. Construction is still very active. So you had almost 1 million jobs come back in action. So, Tana, you brought up unemployment. Unemployment has consistently been declining. I don't even remember what it hit. Last April, it was something crazy like 13 or 14%. I mean, it skyrocketed straight up when they shut the whole world down, right? And, at the time they said it would get to 20. It never did get to 20%. And then it slowly has been falling. But with this last jobs report, it declined to 6%.
Yeah.
It's still high. I mean, you go back a year ago when we were a hot dog doing well, we were at like 3.5% unemployment. So it's getting there. But you know what the estimate was for March for jobs created? Any guesses? Any guesses?
I'm trying to think.
Starts with a 6.
Oh, about 675,000.
I can see you reading something.
No, I'm just looking at you. I'm looking at you.
You're looking at me? Like, was it on my forehead?
Yes.
So estimates for March where they were thinking there'd be 675,000 jobs created, and there was almost 1 million. Blew the numbers out of the water, right? And then on top of it, to make it even better, I've never understood this conundrum, but there's always revisions to government data being released. They always revise. Well, it turns out fourth quarter GDP was actually this, or so they're always tweaking things. They increased the job total numbers from January and February, $156,000 to jobs. 156,000 jobs. So between this month and the revisions, there are over 1 million jobs added to payroll here very recently. Unemployment is falling. Things are getting better. Once again, I was kind of joking and jesting in the beginning of the show, though, is the irony, though, is I feel like it's going to be harder and harder for the government to come up with excuses on why they need to be passing unemployment money kind of stuff. Or it's not, I apologize, stimulus money. We don't have the money to spend. I feel there are very specific people that are hurting greatly here. If you were working in a restaurant, if you were working in a hotel, if you were in these sectors,
entertainment business, you
haven't bounced back as quickly as everybody else. And I think that's part of my big frustration is let's find ways to stimulate and help those specific individuals.
I totally
instead
agree.
Of this mass blanketing. You guys gave Tana like $5,600 in stimulus last week. She didn't need it. She just hit me up for a raise. Like, what the hell's going on? You know what we should do? Here's a fun thought. That money's tax-free. What we should do is figure out what you make, and we should adjust your pay down so that way the stimulus checks fill in the gap. And then it's kind of like you're stimulating my business. I don't know.
I haven't even received it, actually. Have you?
Well, yes. Lots of stimulus checks over here. I get them, but I buy so much Bitcoin so quickly with them that it's
you
pointless.
Do not.
But it was funny that when the stimulus was released, they said that they thought almost 10% of it could go towards Bitcoin purchasing, which then speaks to, wow, yeah, people really needed it.
No,
they really needed it. Let's see here. What else is in the, let's see, another. So the labor force participation went up. Nearly 7.9 fewer Americans counted on unemployment in February 2020. So now things have improved quite a bit. Still problems, still improving, but these are all fantastic positives. Sorry, I'm kind of like slow talking because I was going to that the little blog portfolio to see. What's funny is we follow this high frequency data. I sometimes pop it up on the screen for you guys. And one of the things that they have is they do box office receipts. So how many people are going to the movies kind of a thing.
Yes.
And so it's they have year over year, month over month, week over week on how things are improving. So week over week, it's up a lot. It's up 30%. Month over month, it's up 133%. So locally, it's improving. But what's funny is year over year, it used to be down catastrophically, right? It used to be down like 99.9% because, people used to go to the movies and then they turned it off and now nobody goes and the theaters aren't open. But since since the year has moved past the whole initial shutdown, so that's kind of fallen off the chart kind of a thing. Now it's saying year over year box office receipts are up 400,000%. Yeah.
Wow.
Well, it's because nobody went
exactly to everybody
last year, and now compared to last year, you got a 400,000% return on box office receipts. It's just pretty funny looking. The same thing is happening at TSA checkpoints, even though though really it's still down.
Yeah.
From this point last year to now, it's up 700%. Geez.
Yeah, my son came into town for Easter and he said his flight was full and it was like a super early morning.
Full.
Yeah, it was a super early morning flight. He didn't expect it to be full, but
they had to wear masks and all that, I think, right?
Yeah.
They give you wipies and they really,
definitely. But we are walking around in Texas. No masks wherever we go. Kids are wearing them at school, which is good. But we're able to walk in and out of a store without having to worry about them at this time.
Good.
So
Good.
it's good. Yeah.
Well, things are normalizing. It's a fun fact though. I was reading that Texas just showed the lowest 7-day average since the beginning of COVID, which plays to some strong, eyebrow raising of
we're not wearing
and masks and all this stuff.
And our kids are in school.
How come your numbers are so low? Science. Anyways, that has nothing to do with retirement income planning.
Sorry.
And I think people have criticized us for getting too far off topic. Which is so funny because I was about to click on the CDC COVID data and see how it looked and talk about it, but maybe it's better that I don't. One of the fun facts though that we touched on last week that seems to be constantly evolving, and I just want to throw it out there for people to be conscious about, is that required minimum distribution age. So remember, if you have 401ks, IRAs, 457s, 403bs, these pre-taxed accounts, they really are making a push to change the required minimum distribution age to probably be 75 instead of currently 72. So I just thought I'd toss that out as a seed because these things, it's like sensory overload. I keep reading about this stuff. It's interesting. We'll see how it evolves. Stock market certainly booming this week. The Dow and the S&P hitting all-time highs. The NASDAQ still underperforming. So one of those things to be conscious about, why you should talk to me and Tana about your investments and stuff, is you have to be conscious about sector rotation. I had someone come in literally yesterday, and they were telling me about funds in their 401k. And I said, well, how do you pick the best fund? They're like, well, I just look, and whichever one did the best last year is the one I pick. And I thought, God, that is so interesting as a thought process, because in the world of investing, the worst becomes the best and the best become the worst. For example, last year, the worst two performing sectors in the S&P 500 were energy and financials. And the best performing sector was technology, right? Everyone's locked down and on Zoom. Woohoo.
Yep.
Okay, fun fact, 2021. Tana, what would you think is the best performing sector in 2021? It's either energy or financials. Go.
Go.
Nothing. Come on, give me something. Energy.
I was gonna say energy. Yeah.
Energy. You should say that because last time I was in Texas last year, I paid $1.60 for gas, and I just noticed the other day that the cheap stuff here is like $4.02 or something. So energy has come up a lot. So it's ironic that it was the worst sector last year. Now it's the best sector this year. And so to that person's methodology of picking stocks, if he looked and said, oh my gosh, the technology fund last year was the best, I'm buying technology. Well, what happens is technology is one of the lowest performing sectors this year, whereas financials and energy are the top two. Okay. And that's a very tough way to play the game, is just going off of hindsight. You have to look at the tea leaves of what's happening now, economic data that you have in front of you now, the things that Tana and I are talking about, manufacturing and jobs numbers and GDP. All of these things are so relevant to your individual retirement plan. And just remember, if you have time horizon, you take equity exposure. It's okay to be in the stock market if you have time on the money. In many respects, I think, Tana, you and I were just talking the other day about how for a lot of people, there's more risk in their portfolio on their bonds than even their stocks at this point. Interest rate risk is overwhelming. Right. These are all things that you guys need to be conscious about. So I tried to take the last 2 minutes. Now for clarity for everyone who's listening, I told Tana, hey, can we record on Friday? I promise I'll keep it short. And here we are, not keeping it short. And so now I just wanted to kind of put a little cute, little fluffy, like 1 minute on the back of something that sounded like responsible financial planning stuff.
It was great.
Was it?
Was
thank
great.
you. I do what I can. I do what I can. Well, Tana, I hope you have a wonderful Easter.
Thank you.
The children visiting. You say hi to your husband who is suffering from giantism disease for me. And I'm not joking, people. He's like 7'3" or something.
He's not 7'3".
Well, that's not true.
He's 6'6".
Every door at Tana's house has a round cutout in the middle of the top of it, and he still has to bend down.
That's a great
incredible.
visual.
He drives an F-250 truck.
He does,
and it looks like a Barbie car. He actually had to take the roof off it.
He did not.
It's incredible. Now, If only he had played in the NBA, things would be different
Right?
for Tana right now.
Yeah, he doesn't do basketball.
I don't either. My 11-year-old was really disappointed. Our neighbors have like one of those little court hoops in the street. Like the other day, I tried to shoot, and you could see she's just like shaking her head, like this. What?
She's all embarrassed of her pop.
What are you?
Oh man.
Anyways, everybody, we hope you have a wonderful, holiday here over the
Yes.
weekend. We'll be back a week after that, more or less.
Mhm.
And we appreciate all of our listeners, all of our viewers. So please don't hesitate to call us, 805-500-7035. You can schedule a complimentary financial consultation, figure out your retirement income plans. Let's get your stuff dialed in. Visit our main website, thelindgroup.com. Lind is LYND. Other than that, I hope everybody has a wonderful weekend, like I said, and we'll be back soon.